Hey everyone, Red here. Looks like we had a bear squeeze from hell today. Matter of fact, it was the largest one in history. According to the Top Step guys, today is the largest gap up on any rollover in history. Interesting fact, thank you. There cannot be any bears left in this market. I think they just all got annihilated today. They are probably extinct. I can't imagine anyone still being in this market. I think everyone now is expecting us to go up to 1100, 1120, 1140, whatever. Whether we get there or not, I don't know. BAM investors said they went maximum short today. They're showing a sharp sell-off following what they've been calling for. So they're a little bit longer term. They're not intraday traders like most of the people that read my site. A lot of the people trade, short-term swing terms, daily or every other day, or maybe hold for a week. But these guys are not dead on accurate. But they sure did say today was a obvious day to get short. So unfortunately, I'm taking it up the wazoo today on that squeeze, but I remain short regardless of how bad my position now looks, because I do have faith and confidence in the charts that we didn't break anything here. We are still in this downward sloping channel, as you can see here on the daily chart. So tomorrow, I don't know. Tomorrow could be that pause day, and then they tank it on Monday, leave all these bulls long into the weekend, because there's no bears left. I mean, this was a massive squeeze, 35 points on the S&P. So I mean, it was just pretty horrible. But let's go over these charts anyway. Let's see. No point looking at the weekly. Here, the daily right here. Looking at the daily, you can see basically we have went up here and pierced through the moving average, 10-day moving average, and pretty much come pretty daggone close to tagging the 20 EMA, but we're not quite there. So I don't know if we're going to get there or not. We are still pointing up now. Well, we wasn't pointing up yesterday, but we are today. And we did put in a positive histogram tower bar. Barely put one in here. Not very much of all. The thing, though, to really keep an eye on, though, is even with this massive rally today, look at the ADX. It barely moved up. And the negative DI line barely moved down. I mean, you would have expected this to just shoot straight up like this, and it didn't. There's still a lot of negative, news out there. I guess it's keeping this DI line up here above 30 and this one below 20. I mean, same thing with the RSI. It is hooking back up, but I think it's going to hit this 50 and turn back down. I think this was nothing short of just a bear massacre is all it was. So, moving on to the 60. Yesterday, I looked at this 60-minute. I seen the rollover right here, which was the rollover right here. I thought at that point we were ready to go on down and take it out. But that was just a bear trap. And you could call this a wave A, B, and today was a C made up in a 1, 2, 3 pattern or something. Or it could be a 5-wave move. I guess you could call this a wave 1, 2, 3, 4, 5. And as you can see here, we are still going up, although we are massively overbought right now. So there's nothing to say it's going to turn back down tomorrow. It could just be a flat day. I don't know. I don't think it's going to go up any further. It's massively overbought. It needs to pull back even if it is going to go up further. So if it pulls back, it means it's going to be back inside the channel again, and it's going to have to gap out of that channel. So will it? On what great news? I don't know. What was the great news out today? Jobless claims met expectations? Come on. That was a joke. Basically, you've seen the ADX line here tank back down. While it did, the green positive DI line did rise. And so now at this point it's ready to hook back up and give power to one of these two lines. So as this rises up, one of these, either the negative or the positive, is going to be on top and really accelerate a move in one direction or another. I think, I am bearish, of course, but the charts, they're not lying. It's just sometimes you just can't pick the exact time that they're going to do it. I mean, basically, I got fooled like many bears did yesterday, thinking that this move right here was the start of it. But they squeezed those bears out, moved it up again. Now, I don't think there's going to be any more. I think this just wiped out all the bears. I don't think there's any bears left to squeeze. So I think they're out of there. So now you look at this whole pattern from down here, starting at this 1044 low, up to 1100 high, back down here to 1070 low, back up to here, 1110 high, and then back down. That forms an M. Just a big M pattern. These are notoriously bearish patterns called MAs. Here is the start of the A leg right here. I thought it completed yesterday here and was ready to go down to here. But it did not. It continued on here. So if it starts tomorrow and goes down, hopefully that will be the final start of the A leg. The A legs are typically at least as long as one of these legs here, at least, if not longer. That's why they're so bearish. You go up, down, there's your M, here's your A, and it takes us down to 970 range in that area. That's where it should go down to. 1,000-point drop on the Dow, at least. I mean, that's why they're so bearish. So if this starts tomorrow and does hook down, the 60 will be in line. That will hook up, give strength to the whichever one is on top, which, once it moves down, of course, it's going to be the negative one. And you look at the 15-minute chart, and you can see it's massively overbought here as well. And you've got 1, 2, 3 towers sloping down while the market is moving up. That is called a negative divergence. So the market moves up, power moves down, the strength of it moves down. So once it starts rolling down, this should just start really moving down hard. Whether to do it tomorrow again or not, I don't know. So the 15's telling me we're ready to tank and go down. And as you can see here, it did this on low strength because the ADX line here was low. I mean, look how high it was here on this move down. When this ADX line moves and runs back up here, if this negative DI line is on, that's all the more reason to confirm that this could be a 1,000-point drop. Again, I thought it was going to be on this move, but as you can see, they just ran it back up. So, looking at all those charts, that's what I see for tomorrow. It's kind of the same thing. It's even more bearish for tomorrow than it was today. Looking at the 5-minute chart, same thing here. It is overbought, and you've got massively overbought here. Of course, this is just a 5-minute chart. That should about cover it. I do expect the move down to come, and I do expect it to start hopefully tomorrow. If not, if tomorrow's just a pause day, then I expect it to really sell off hard on Monday. But I think it will start tomorrow. I think we're going to start to see this curl over tomorrow. Everything points to that. This has just been trading sideways. I mean, look at it. Look at these weak little towers. It's not like they're really rising up and putting in a big move like here. Then when you go over there and you look at Cobra's latest post and his charts, I mean, look at the charts he just posted. When you see this, who's buying this thing? I mean, look at this. Look at all the money coming out of this. This was Tuesday of this week. There's no money in this market. This was the Feds. This was all of our taxpayer dollars that was in here during this massive run-up since March of last year. It's not there anymore. They're taking money out. So who's buying? And then here's the institution buying and selling. You can see they are dumping. This is distribution. They are dumping on these rallies. No question about it. They are not buying. And then finally, the last one is the mutual funds, our money. Lowest it's been in forever. Look at how many years it's been. Lower than last 50 years. The lowest amount of money in there. So where are they getting the money? This thing's got a tank, folks. All there is to it. Thanks.